Based on the historical data and forecast, Bitcoin shows a generally upward trend, with some volatility. The support price is consistently around $105,800, and the resistance is around $110,200. The RSI fluctuates between 42.4 and 63.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been approaching the upper band, suggesting potential for a pullback. Considering these factors, I propose a portfolio strategy combining long positions during oversold conditions and anticipating upward movement based on the forecast. The primary strategy will be a long position when the RSI falls below 30, with an entry price of $101,900. The stop loss will be set at $101,600 to limit potential losses. The initial target price is $108,800, aligning with the forecast and the upper Bollinger Band. If the price reaches $108,800, we will move the stop loss to the break-even point, securing the profit. A secondary target price of $110,500 will be considered if the upward momentum continues. This strategy leverages the oversold conditions, the forecast's positive outlook, and the Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, Ethereum shows a clear upward trend. The price has consistently bounced off the support level of $2,680 and is forecasted to continue rising, reaching $3,030 by June 18, 2025. Considering the RSI, which has fluctuated between 46.2 and 67.2, we can implement a strategy that combines RSI, Bollinger Bands, and trend analysis. I suggest a long position strategy. We will enter a long position when the RSI dips below 50 and the price touches the bottom of the Bollinger Bands. The entry price will be $2,390. The stop loss will be set just below the bottom of the Bollinger Bands at $2,380. The initial target price will be the resistance level of $2,810, and we will move the stop loss to break even once the price reaches that level. Furthermore, as the price approaches the $2,810 resistance, we will adjust our strategy to capitalize on the continued upward momentum. When the price reaches $2,810, we will set a new target price of $3,030, aligning with the forecasted price. The stop loss will be moved to $2,780 to protect profits. This combined strategy leverages the strength of the upward trend, uses RSI and Bollinger Bands for precise entry and exit points, and incorporates forecasted price movements to maximize potential returns. This portfolio will provide high returns with reasonable risk. Based on the historical data and forecast, XRP shows a slightly upward trend with periods of consolidation. The RSI consistently fluctuates, but generally remains within the 37 to 54 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Given the current RSI around 50 and the forecast prices slightly above the recent close, I propose a moderately bullish strategy. We will implement a tiered approach combining RSI and Bollinger Band signals. First, initiate a long position at $2.22. Set a stop loss at $2.16, just below the support level, to protect against downside risk. The initial target price will be $2.26, aligning with the upper Bollinger Band and a reasonable profit margin. If the price reaches $2.26, we will move the stop loss to the entry price of $2.22 to secure profits and reduce risk. Further, if the price continues to rise and breaks above $2.26, we can set a second target price at $2.3, but with a tighter stop loss at $2.27 to manage potential retracement. This strategy balances potential gains with risk mitigation, capitalizing on the anticipated upward trend while safeguarding against unexpected market shifts. Based on the historical data and forecast, BNB shows a slight upward trend with support at $643 and resistance at $673. The RSI fluctuates between 41.4 and 57.7, indicating periods of both oversold and overbought conditions. Considering the forecast prices, which remain relatively stable around $660 to $671, I propose a moderately bullish strategy incorporating RSI and Bollinger Bands. We will enter a long position when the price touches the bottom of the Bollinger Bands and the RSI is below 30. The entry price will be $637. The stop loss will be set just below the bottom Bollinger Band at $635 to mitigate potential losses. The initial target price will be the resistance level at $673. To refine this strategy, we will implement a dynamic target adjustment based on the RSI. If the price reaches $673 and the RSI exceeds 70, we will move the stop loss to the entry price of $637, securing a risk-free profit. Subsequently, we will set a new target price at $689, aligning with the upper Bollinger Band. If the price fails to reach $673 and the RSI falls below 30 again, we will exit the position at $667 to minimize losses. This combined approach leverages the support and resistance levels, RSI signals, and Bollinger Bands to optimize potential returns while managing risk effectively. Based on the historical data and forecast, Solana shows a slight upward trend. The RSI consistently remained below 80, indicating a lack of overbought conditions, while dipping below 20 only briefly, suggesting limited oversold periods. The Bollinger Bands have been widening, indicating increased volatility. The forecast prices suggest a continued upward trajectory, with prices reaching $167 on June 18, 2025. Considering these factors, I propose a long position strategy. Entry price should be $159. Coinciding with the forecast price on June 12, 2025. Set a stop loss at $157, just below the support level, to limit potential losses. The initial target price should be $168, aligning with the forecast price on June 18, 2025. To refine the strategy, we can incorporate the RSI and Bollinger Bands. If the RSI drops below 30, indicating an oversold condition, consider entering a long position at $159 with a stop loss at $157 and a target price of $168. Conversely, if the price touches the lower Bollinger Band, which is at $146, it signals a potential buying opportunity. However, given the current upward trend and forecast, the primary strategy remains a long position initiated at $159, with a stop loss at $157 and a target price of $168. This portfolio combines the momentum of the forecast with the safety of the support level and the volatility indicated by the Bollinger Bands for optimized returns. Based on the historical data and forecast, Dogecoin demonstrates a downtrend with recent consolidation. The RSI consistently stays below 50, indicating a bearish sentiment. The Bollinger Bands show that the price has been fluctuating within a narrow range, but the bottom band has been tested several times, suggesting potential support at $0.182. The forecast for the next week predicts a slight decrease initially, followed by a potential bounce. Considering these factors, I propose a cautious strategy focused on short-term gains. I recommend a buy position at $0.189, coinciding with the forecasted price and the proximity to the support level of $0.182. Set a stop loss at $0.178, just below the recent low and the bottom of the Bollinger Bands. For the target price, aim for $0.198, aligning with the upper end of the recent trading range and the forecast high. This strategy leverages the potential bounce from the support level while mitigating risk with a tight stop loss. If the price breaks below $0.178, exit the position immediately. If the price reaches $0.198, take profit and consider re-evaluating the market conditions for a potential reversal strategy. Based on the historical data and forecast, TRON shows a slight upward trend with periods of consolidation. The RSI fluctuates between 50 and 68, indicating neither strong overbought nor oversold conditions recently. The Bollinger Bands have been narrowing, suggesting a period of low volatility, but are now expanding slightly, hinting at potential price movement. Considering the support at $0.275 and the recent price action, I recommend a long position strategy. We will enter a long position at $0.286, placing a stop-loss order at $0.275 just below the established support level to limit potential losses. The initial target price will be $0.291, aligning with the forecast and the upper Bollinger Band. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will enter a long position at the prevailing price, with a stop-loss at $0.275 and a target price of $0.293. Conversely, if the price touches the lower Bollinger Band, we will enter a long position at that price, with a stop-loss at $0.27 and a target price of $0.295. The most efficient portfolio will prioritize the Bollinger Band signal, as it reflects the current volatility and momentum of TRON. This combined approach aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Cardano shows a fluctuating trend with recent upward momentum. The RSI consistently remains below 80, indicating that the asset is not currently overbought. However, the RSI has been trending upwards, suggesting increasing buying pressure. The Bollinger Bands have been narrowing recently, which often precedes a breakout. Given the forecast prices, I recommend a long position. Entry price will be $0.691. To manage risk, set a stop-loss at $0.689, just below the support level. The initial target price will be $0.722, aligning with the recent resistance level and forecast price. To refine this strategy, I'll incorporate the RSI and Bollinger Bands. If the RSI crosses above 50, consider moving the stop-loss to break even. If the price touches the upper Bollinger Band, move the stop-loss to the center of the Bollinger Bands. For the second target price, if the price reaches $0.722, set a new target at $0.718, based on the forecast. This combined strategy aims to capitalize on the upward momentum while mitigating potential losses with well-defined stop-loss levels. Based on the historical data and forecast, Sui shows a generally upward trend with periods of consolidation. The RSI indicates that the asset is currently not in oversold or overbought territory, fluctuating around 47 to 53. The Bollinger Bands show that the price is approaching the upper band, suggesting potential for a short-term pullback. Considering this, I recommend a moderately bullish strategy. We will enter a long position when the price dips to $3.33, coinciding with the first forecasted price and near the support level of $3.19. The stop-loss should be set at $3.16, just below the recent low-end support, to mitigate potential losses. The initial target price is $3.5, aligning with the forecasted price and the center of the Bollinger Bands. To maximize returns and manage risk, I propose a tiered target strategy. If the price reaches $3.5, we will move the stop-loss to the entry price of $3.33 to secure profits and participate in further upside. If the price continues to rise, the final target price is $3.45, based on the forecast. This strategy combines technical indicators and forecast data to capitalize on the upward trend while incorporating risk management techniques like stop-loss orders and profit-taking targets. This approach balances potential gains with controlled risk exposure, suitable for a high-returns investment strategy. Based on the historical data and forecast, Chainlink exhibits a generally upward trend, with recent volatility. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands show price fluctuations within a defined range. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Initially, we will enter a long position at $14.6, coinciding with the forecast price on June 12, 2025, and the lower Bollinger Band. The stop-loss will be set at $13.6, just below the support level, to mitigate potential losses. The initial target price will be $15.6, aligning with the forecast price on June 16, 2025 and June 17, 2025. Subsequently, if the price reaches the initial target, we will adjust the strategy. We will move the stop-loss to the entry price of $14.6, securing partial profits. The new target price will be $16.7, the resistance level. If the RSI reaches 80, indicating an overbought condition, we will consider taking partial profits and tightening the stop loss. This dynamic approach allows us to capitalize on the upward trend while managing risk effectively. This portfolio combines the strengths of each individual strategy, creating a robust and adaptable investment plan for Chainlink. Based on the historical data and forecast, DeXe shows a downtrend with significant volatility. The RSI consistently dips below 35, indicating oversold conditions, while the Bollinger Bands demonstrate periods of contraction and expansion. Considering the forecast for the next week, prices are projected to remain in the $8 to $10 range, reinforcing the bearish outlook. Our primary strategy will focus on capitalizing on these oversold bounces with a conservative approach. We will enter a long position when the RSI falls below 20 and the price touches the support level of $9.21. The stop loss will be set just below the support at $8.9 to protect against further downside risk. The initial target price will be the midband of the Bollinger Bands, around $11.4, aiming for a quick profit. To refine our strategy, we will incorporate a secondary layer based on the Bollinger Bands. If the price bounces off the support and approaches the upper band, around $11.4, we will consider moving the stop loss to break even to secure profits. If the price fails to reach the upper band and shows signs of reversing, we will exit the position. The final portfolio will be a 60% allocation to the RSI-based strategy and a 40% allocation to the Bollinger Bands-based strategy, providing a balance between momentum and volatility. The predicted entry price is $9.21, the stop loss price is $8.9, and the target price is $11.4. Based on the historical data and forecast, Aave exhibits a clear upward trend. The price has consistently tested and bounced from the support level of $266, while the resistance level has been progressively increasing. The RSI values have largely remained above 50, with recent excursions into overbought territory, above 70, suggesting continued bullish momentum. The Bollinger Bands are widening, indicating increasing volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. Specifically, I suggest entering a long position at $293. Given the recent upward trend and the forecast price of $302, a conservative stop loss should be placed at $283, just below the previous resistance level. For the target price, aiming for $344, aligning with the forecast high, offers a substantial return. This strategy combines technical indicators like RSI and Bollinger Bands with support and resistance levels, creating a robust and high-potential investment opportunity. The strategy is to buy at $293, set a stop loss at $283, and target $344. Based on the historical data and forecast, Stellar shows a slight upward trend with periods of consolidation. The RSI fluctuates between 36.5 and 53.3, indicating neither strong overbought nor oversold conditions for most of the period. However, the recent RSI values are approaching the 50 mark, suggesting a potential for a slight pullback before continuing the upward trajectory. The Bollinger Bands have been narrowing recently, which could signal a breakout. Considering the support price of $0.273 and the resistance price of $0.285, I propose a strategy focused on capitalizing on potential breakouts. My recommendation is to initiate a long position at $0.271. The stop loss should be set just below the support level at $0.268 to protect against a potential downward reversal. The initial target price will be the resistance level at $0.285. If the price reaches $0.285, consider taking partial profits and setting a trailing stop loss to capture further gains. Given the narrowing Bollinger Bands, a breakout above $0.285 could lead to a move towards $0.294, which would be a secondary target. This strategy combines technical indicators and price levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Compound exhibits a strong upward trend. The price has broken through the resistance level of $60.7, and the forecast indicates continued price increases. The RSI has consistently been above 50, indicating bullish momentum, and recently reached overbought levels, suggesting a potential pullback before further gains. The Bollinger Bands show that the price is currently trading near the upper band, reinforcing the bullish outlook. Therefore, I recommend a long position strategy. We will enter a long position on June 12, 2025, at $53.8. The stop loss will be set at $48.4, just below the support level, to limit potential losses. The initial target price will be $64.8, aligning with the forecast for June 12, 2025. To maximize returns, we will implement a trailing stop-loss strategy. Once the price reaches $64.8, we will move the stop-loss to $53.8. If the price continues to rise, we will adjust the stop-loss to maintain a secure profit while allowing for further gains. The final target price will be $66.3, based on the forecast for June 18, 2025. This combined strategy leverages the upward trend, utilizes RSI and Bollinger Bands for confirmation, and incorporates risk management through stop-loss orders, aiming for high returns while protecting capital. Based on the historical data and forecast, BNB shows a slight upward trend with support at $643 and resistance at $673. The RSI fluctuates between 41.4 and 57.7, indicating periods of both oversold and overbought conditions. Considering the forecast prices, which remain relatively stable around $660 to $671, I propose a moderately bullish strategy incorporating RSI and Bollinger Bands. We will enter a long position when the price touches the bottom of the Bollinger Bands and the RSI is below 30. The entry price will be $637. The stop loss will be set just below the bottom Bollinger Band at $635 to mitigate potential losses. The initial target price will be the resistance level at $673. To refine this strategy, we will implement a dynamic target adjustment based on the RSI. If the price reaches $673 and the RSI exceeds 70, we will move the stop loss to the entry price of $637, securing a risk-free profit. Subsequently, we will set a new target price at $689, aligning with the upper Bollinger Band. If the price fails to reach $673 and the RSI falls below 30 again, we will exit the position at $667 to minimize losses. This combined approach leverages the support and resistance levels, RSI signals, and Bollinger Bands to optimize potential returns while managing risk effectively. Based on the historical data and forecast, NEXO shows a slight upward trend, consistently bouncing off the support price of $1.22. The RSI fluctuates between 43.4 and 53.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. Initially, we will wait for the price to touch the support price of $1.22 and the RSI to fall below 40, signaling an oversold condition. We will enter a long position at $1.22 with a stop-loss placed just below the lower Bollinger Band at $1.21. The target price will be set at the resistance level of $1.26, aiming for a quick profit. To refine the strategy, we will incorporate the Bollinger Bands for confirmation. If the price approaches the lower band and the RSI is below 40, it strengthens the buy signal. If the price breaks above the upper Bollinger Band and the RSI exceeds 80, we will consider taking profits early at $1.27. This combined approach balances the risk of missing out on potential gains with the need to protect capital. Therefore, the final portfolio will be a long position at $1.22 with a stop loss at $1.21 and a target price of $1.26. With an early profit-taking option at $1.27 if the price reaches the upper Bollinger Band and RSI exceeds 80. Based on the historical data and forecast, Virtual's protocol shows a slight upward trend. The price has been fluctuating within the support of $2.05 and resistance of $2.11. The RSI has been oscillating around the midpoint, indicating neutral momentum. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the forecast, the The price is expected to rise to $2.33 within the next week, and the RSI is not yet in the oversold zone. Therefore, I propose a moderately bullish strategy. We will initiate a long position when the price retraces to the support level of $2.05. The stop loss will be set slightly below the support at $2.03 to account for potential volatility. The initial target price will be the resistance level of $2.11, offering a quick profit. To capitalize on the upward forecast, we will implement a trailing stop-loss strategy. Once the price reaches $2.11, we will move the stop-loss to $2.07. If the price continues to rise, we will adjust the stop-loss accordingly, always maintaining a buffer of 4 cents below the current price. The final target price will be $2.33, based on the forecast. This strategy combines a conservative entry point with a dynamic stop-loss and a realistic target, aiming to maximize returns while managing risk effectively. The RSI is not near the oversold level, so we should be cautious about entering the market. Based on the historical data and forecast, PAX Gold demonstrates a generally upward trend, consistently bouncing off the support price of $3,330 and approaching the resistance level of $3,460. The RSI values fluctuate between 49.6 and 60.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been relatively contained within the bands, with recent movement towards the upper band. Given this, I propose a strategy that combines RSI and Bollinger Band signals to maximize potential returns. We will focus on a buy strategy when the price approaches the support level and the RSI is below 50, aiming to capitalize on the upward trend. Specifically, I recommend entering a long position at $3,380. The stop loss should be set at $3,330 to protect against a potential reversal. The initial target price is $3,450, aligning with the forecast and the resistance level. If the price reaches $3,450, we will reevaluate the situation and consider raising the stop loss to $3,400 and setting a second target price at $3,460. This approach allows for capturing significant gains while mitigating risk. This portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% support and resistance strategy. Based on the historical data and forecast, POL-X-Matic demonstrates a slight upward trend, consistently bouncing off the support price of $0.21. The RSI fluctuates, with recent values nearing the overbought territory, suggesting a potential pullback is possible. The Bollinger Bands show that the price is approaching the upper band, further indicating a possible correction. Therefore, I recommend a strategic approach combining RSI and Bollinger Band signals. We will implement a buy-on-dip strategy. The entry price will be $0.222 when the RSI falls below 40 and the price touches the lower Bollinger Band. The stop loss will be set at $0.209, just below the lower Bollinger Band to mitigate potential downside risk. The target price will be $0.241, aligning with the upper Bollinger Band and a reasonable profit margin. To maximize returns, I suggest a portfolio allocation of 60% to this buy-on-dip strategy and 40% to a conservative strategy. The conservative strategy involves buying when the price breaks above the resistance of $0.251 with an entry price of $0.251, a stop loss at $0.24, and a target price of $0.27. This diversified approach balances potential high gains with risk mitigation, ensuring a robust investment portfolio for POL-X-Matic. This approach will yield high returns. Based on the historical data and forecast, Kaia shows a clear upward trend. The RSI has recently crossed above 50, indicating strengthening momentum. The forecast data projects further price increases, with values ranging from $0.139 to $0.182. Given these factors, I recommend a long position strategy. Entry price will be $0.139. The stop loss should be set just below the recent low of $0.103, at $0.101, to limit potential losses. The initial target price is $0.151, aligning with the first forecast data point and a reasonable profit margin. To refine the strategy further, we'll incorporate the Bollinger Bands. The current price is near the middle band, suggesting a stable entry point. If the price breaks above the upper Bollinger Band of $0.15, consider raising the target price to $0.168. Conversely, if the price falls below the lower Bollinger Band of $0.101, the stop loss should be adjusted to $0.092. This dynamic adjustment, combined with the RSI and forecast data, will maximize potential returns while minimizing risk. The portfolio will be 60% long position and 40% cash.